Thank you. Good afternoon, honorable ministers, gentlemen of the press, ladies and gentlemen. Following on from the discussion of the medium-term economic and expenditure framework and the fiscal strategy paper, we also approved today financing or the application for financing from the World Bank, and in particular the International Development Association, which is really the virtually free or zero interest lending arm or financing arm of the World Bank. The total is $1.5 billion. And the background is, just as you heard from the Minister of Planning and Budget, the world today is one of high interest rates as the developed world looks to fight inflation. They're doing it by restricting money, keeping interest rates high so that they can get inflation down. What that means is that interest rates for everybody else become not just high, but very painful, if not unaffordable. Within that context, Nigeria has been able to make the kind of macroeconomic moves, has been able to take the tough decisions to restore balance in the economy, in the government's finances, that has warranted support, that has gendered and that has elicited even support from the multilateral development banks. And it's on the basis of that that the World Bank is willing to consider and to process on our behalf $1.5 billion of concessional financing, relatively cheap financing, and financing that will be disbursed relatively quickly. And that was what was presented to the Council, the Federal Executive Council, and the members approved that we go ahead with that financing, given that it is affordable. Secondly, an $80 million financing from the African Development Bank was also approved by the Federal Executive Council. This financing is for a project in Ekiti called the Ekiti Knowledge Zone Project, EKZ. And the EKZ is basically to support young people and their quest to take on technology, to use it, to be employed, to be trained, and to benefit from being part of the knowledge economy, being part of the technological wave that is present very much in Nigeria, and which is becoming a bigger and bigger share of the economy. So it's $80 million to help young people in the sector of knowledge economy, technology, and communications generally. Thank you.
Thank you, Honorable Minister. Like I said,
much. Let me start by just following on from what my colleague, the Minister of Budget and Planning, had said in response to the exchange rate and the figure used in the expenditure framework document. I think, you know, we probably are all aware that an exchange rate is determined by fundamental factors as well as other less objective like factors such as speculation and market interaction. But fundamentally, if you look at the last time the Naira was fairly stable or relatively stable, maybe 10 years or so ago, and you plot the differential between the dollar and the Naira in terms of the interest rates, you probably come to somewhere around the figure that we see that we see in the document, and some not even interest rates so much as the inflation rate. That's the key determinant, the difference between the two. If the inflation rate were the same, the gap between the currencies or the exchange rate between the two of them would actually not move by much. But that's just to contribute to the debate and the understanding regarding the exchange rate assumption that has been used. On the 1.5 billion, in technical terms, it's called a budget support program. And it is something that is more or less earned rather than given automatically. The bold, brave, courageous, and decisive measures that Mr. President has taken is being rewarded by processing for Nigeria $1.5 billion of immediate financing, which is provided that we do everything on our own side, it will be in before the end of the year. And it comes in one go, it doesn't drip as will be done for a project, and it is really just to support the reform effort. The reform does not come without a lag between cause and effect. And although some effects are already in place, such as already smuggling is down, and domestic production in some areas is being encouraged and is being increased, it takes time before the full benefits are in. And in the meantime, things are tough. Mr. President is aware, and that is why he has the intervention package, 500 billion naira, as well as other measures, including a wage award and later on a new wage structure for the country. So I think that answers all the questions about the 1.5 billion, why and how soon, and use of proceeds. It goes straight into the balance of payments, goes straight into the reserves to support the effort to improve the country's fiscal situation, to improve government finances. And as I think you have heard from NNPC, GCEO, as well as others, by the time Mr. President took over, the country was financially in very dire straits. NNPC itself was threatened financially by the continuous payment of the subsidy regime. Regarding the IMF and tax, the multilateral development institutions are in place essentially to help to help balance things in the world economy, keep it going, and help developing countries as much as possible to do well and catch up. So apart from funding, they give advice. They have a lot of data, there are a lot of analysis which can be taken, and which can be you can take their advice without taking their money. If you don't like the conditions, the advice comes unconditionally every single time. And you can even ask them to model things for you and advise. So the interaction with the IMF and any other multilateral development bank is not necessarily for the money. In this particular case, you're talking about the fact that the IMF pointed to the glaring fact that as a percentage of the GDP, as a percentage of all the wealth created in Nigeria year after year, only about 8% is collected in taxes. The government only gets 8%, and it's the government fundamentally that provides the law and order and the environment in which all that wealth is made, all that wealth, that income, that consumption capability is made, and only 8% comes back. It's low by African standards, it's low by world standards. Other countries, Europe, they go as high as 60, 70%. So that really, I think, explains why we are looking to take advice that says, grow your revenue. We have a tax Fiscal Policy and Tax Reform Committee, whose commitment is to take the tax over GDP, the percentage of tax collected as a result of GDP, to 18%. And finally, why borrowing? As I've said, the borrowing is concessional, is cheap, and it is needed. Thank you.
Medium-term expenditure framework is a requirement of the Fiscal Responsibility Act. So it's always a 3-year document. So this Fiscal Responsibility Act is for the years 2024 to 2026. The $700 reference price assumes our optimism that investment flows will continue to come in, given all the engagements, given all the positive traction we are seeing from investors, from the engagement that were led by Mr. President personally to different countries, in particular India, UAE, and France. The engagement led by the coordinating minister of the economy, engagement led by the trade and investment minister, and indeed other ministers. So now increasingly engagement made by the governor of the Central Bank of Nigeria, and indeed all other ministers. So we believe that these inflows will help us to clear the backlog, and the exchange rate will begin to reflect a stronger value than the current weakness. Equally,
There is also the one for supplementary.
I noticed. Equally, there was a question on the assumptions that I spoke about, a number of assumptions, but I said one. I said two. The assumptions include oil price benchmark, which I said for 2024, we are assuming 73.96, oil production of 1.78 million barrels a day, exchange rate of 700, then the inflation of 21%, and GDP growth rate of 3.76%. The aggregate expenditure is estimated at 26.01 trillion naira for the 2024 budget, which includes statutory transfers of 1.3 trillion, non-debt recurrent expenditure of 10.26 trillion, debt service estimated at 8.25 trillion, and as well as 7.78 being provided for personnel and pension cost. Debt service increased because 22.7 trillion naira ways and means was securitized, meaning it became a federal government debt at 9%. So that is easily about 2.1 trillion naira debt service. Equally, personnel costs are going up because of the transfers pursuant to the agreement with Labor, which the Minister of Labor spoke about, and indeed anticipation that further agreement with Labor might increase in the salary and pensions increases. Thank you. I hope. Expenditure is 26.01 trillion. Sorry? Well, sorry? Yes, there will be a supplementary budget because, of course, there are continuing obligations and there are responses to security which can be immediate. So Mr. President is mindful of those and he is assessing them. But Mr. President is also committed to the budget process and its integrity. So he wants to ensure that monies that are appropriated will be can be spent in the period for which they are appropriated. One. And then in terms of presentation of the budget, Mr. President has been engaging with the National Assembly leadership, even ahead of the presentation, to say, these are our assumptions, these are our thought processes, so that it can reduce the lead time for which the budget has to go through such considerations, because these are things that there are national interest concerned, there are international economic dynamics and reference prices that are not difficult to agree upon. And because of that, we anticipate, and the broader, generally good cooperation between the executive and the National Assembly, we believe that this presentation, these budgets will be presented in good time, particularly the 2024 budget, to be passed as before 31st December, and to be passed and signed before 31st December 2023.